All right, let's get started. Hi, I'm Lindsay Crone. I'm the Director of Marketing at Clear Capital. Before we begin the webinar, I just wanted to go over a few housekeeping items. This webinar will be recorded and we will send it out via email. We do welcome questions throughout the webinar. You can use the Q&A button located at the bottom of the Zoom window to submit your questions. So please feel free to submit them throughout and we'll get them answered. We'll also have time at the end of the webinar to go over additional questions. Today's webinar, we will review the goals of our partnership, the benefits of using ClearAVM for underwriting, and we'll do a quick demo on how to order through BeSmartee. Before we get into the details, let me quickly introduce the panelists. Tim Nguyen is the CEO and co-founder at BeSmartee, a fintech powering the digital transformation of mortgage and commercial lenders. As Tim sets the direction of the company, as CEO, Tim sets the direction of the company, defines its product vision, defines its culture, leads mergers and acquisitions initiatives, and stays close to the company's most strategic clients and partners. Erica Vegan is the Senior Product Manager of Real Estate Analytics at Clear Capital, a real estate valuation technology company with a simple purpose: to build confidence in real estate decisions, to strengthen communities, and improve lives. Erica's experience building software tools for home equity applications and underwriting drives her to help lenders to provide a better borrower experience using our industry-leading AVM. So now I'll kick off the webinar by handing it over to Tim from BeSmartee.
Lindsay, thank you very much, and thank you, Erica, for joining us today on the joint webinar. First off, super excited to have partnered with Clear Capital, known the folks at Clear Capital for many years, and we finally got the integration done where we have integrated our ClearAVM or their ClearAVM product into the BeSmartee platform, making that available to the entire BeSmartee customer base. Ultimately, when we looked at this partnership, we really looked at it through the lens of how do we provide value to all of our end users, including the consumers that our end users serve every single day. First and foremost, there's record levels of tappable home equity still with low, super low interest rates that people are in. It makes putting consumers into a home equity product such as a HELOC or HELOan a viable and practical solution to today's rate environment. So with that in mind, one of the first things is really reduce the cycle time for home equity products. Home equity products are inherently short, but with an integration such as this with Clear Capital, it makes the process even shorter, faster, more streamlined for consumers. Number two, providing transparency. So as consumers work through, apply for a home equity product, the ClearAVM will come back and populate in front of the consumer where they can take a look at their estimated value, and they can calculate the line of credit that they might be interested in or the HELOan that might be interested in, and also state an initial draw amount as well. So really at the end of the day, we're taking best of breed technology, putting it into a point of sale to serve consumers better for a more streamlined, effective origination process.
Hi, everybody. Erica here. I'll be, also diving into how the AVMs can be utilized throughout the entire loan experience from the top of the funnel, and also provide clarity and certainty during underwriting so that you can have a great conversion rate for your customers from the first estimate that you give all the way to closing. So ClearAVM is a reliable automated valuation model that provides a dependable valuation for home equity loans. ClearAVM has national coverage, which includes 139 million valuations across the US with 95% coverage. So you can have certainty not only in the valuation, but also that you'll be able to get back a number for most of the homes that you're evaluating. We include with each one of our AVMs a confidence score such that you can have a certain amount of reliability from the beginning of your funnel about that specific valuation. So this confidence score is what you can use to determine if the AVM is right for the use case that you're using it for. So dependent on your organization's due diligence requirements, if a confidence score is too low, you can pass on it and opt for other valuation products that are offered through the BeSmartee platform, or opt into, for example, an appraisal or an alternate valuation in the event that it doesn't meet your needs. We like to provide that type of transparency and clarity upfront, as it is a model that intakes information and is dependent on data availability. So we also produce with each one of our ClearAVMs, and when you're ordering through the BeSmartee platform, you'll also receive a PDF that includes the AVM value, as well as comparable properties that are both recently sold or listed properties. These properties are ranked according to Clear Capital's proprietary comparable ranking, and will serve you up information that validates that valuation that we're presenting. Additionally, we have more information about the subject property and also that confidence score. So something that's really valuable about utilizing an AVM is that it is a very fast valuation. And at its low price point, it can be valuable to utilize that valuation very high in the funnel. So for pre-qualification purposes, you can utilize the same valuation that ends up being the value that you're using as you're in your due diligence and closing. And so for this purposes, you can create an environment of trust with your end customers, because that estimate won't change over time. And instead you can really rely on it and utilize that number throughout your throughout the customer's journey.
So I think the big question is why now? Right, so we know that tappable home equity has record highs. A lot of there's new takeout partners entering the market, providing liquidity and funding sources to brokers, independent mortgage bankers, beyond the traditional FIs, where the banks and the credit unions have traditionally offered this. One thing we're starting to hear about a lot here is assumable mortgages, right? We're coming from a record low interest rate environment. It's wise for people not to move, not to sell. There's really no motivation to do so unless there's a life event. So, one thing we're hearing about in the market is, as we all know, FHA loans are assumable beyond a certain year. Majority of loans that are FHA that are not assumable, those are very old loans. So the vast majority is assumable. Same thing with VA loans as well. So this is something we're starting to see from our client base. They're looking, helping consumers get into homes for sale where the existing mortgage, first lien mortgage, is a VA, is an FHA. With FHA, there's an approval process. So with this, what we're also seeing, right, is as part of this equation, FHA will move the loan, for example, to the new borrower, but the consumer has equity in the property. So that equity can be very well served with a home equity product, whether it's a line of credit or a HELOC. And this is where the ClearAVM will come into play, and the BeSmartee point of sale will come into play. So when you're servicing these customers, they're buying home, you're helping them assume the mortgage, you help the seller capture the gain on equity. Right, so these products can be funded, and we all know that these products are going to be easier to originate. It's going to be higher volume. It's also going to be lower margin, but it still allows you to serve your community, serve your borrowers, because the environments will change in the future. If you can do good to your borrowers today, you'll have a higher chance of being with them tomorrow. Erica, are you seeing that? Are you seeing that as well in terms of the applicability of the ClearAVM, not just in home equity, but tying that home equity transaction to a first lien mortgage transaction as well? Love to see what kind of escalation looks like and what the process looks like once the AVM is ordered in. Maybe it doesn't meet the standards, or maybe it just has to be upgraded.
Yeah, certainly. So AVMs are extremely applicable for home equity loans. However, across different types of loans, AVMs can be utilized, of course, in other parts of due diligence underwriting, as well as for marketing purposes in the pre-qualification aspect. So for loans that require specific types of perhaps traditional valuations, we see those lenders utilizing AVMs for estimates or for, creating pre-qualification, as well as retargeting of their existing customers. So in the event that you have a pool of customers, to determine how much equity they have available in their homes, they can utilize an AVM to kind of tease that out alongside of the existing first lien position. So finding out how much equity is actually available for you to tap within your existing customer base.
I got a question for you, Erica, that comes up almost every time when we're talking to lenders entering the home equity lending market. So you got the ClearAVM. There's also other AVMs right on the marketplace that you all work with as well. There's different takeout partners and investors. The bank, the FI, the independent mortgage bank could all have different overlays. So I'm curious to see what your take is on the kind of the I guess I call it the pattern. Do you start with one AVM, you use that AVM all the way from origination to processing to closing and funding? What happens if the investor doesn't accept it, right? What's the next step of escalation? What happens if it's a large loan amount? Are you running two AVMs? I think the user base here, the audience, could really benefit from understanding, okay, this AVM, how does it grow or shrink over time through the life of that origination?
Certainly. So one of the benefits, right, that we highlighted before is that you have information about the confidence score up front. And so obviously when originating these loans, you should be working in tandem with your investor partners in understanding what those appropriate guidelines are. Clear Capital's AVM is well trusted within the industry. However, always make sure that the valuation product that you're choosing is suitable for the loan product that you're originating. And so for that reason, upfront, when you utilize an AVM, perhaps in pre-qualification, you're able to see that confidence score. And in the event that the confidence score that Clear Capital is returning is not within the needs of your investor, you might be able to opt to another product through the BeSmartee platform. You can order other types of valuation products that are acceptable for when an AVM isn't a suitable product. That can happen for a variety of reasons outside of the confidence score as well. Perhaps it's a loan that's above the specific transaction amount where an AVM is applicable under the interagency guidelines. Or perhaps it has a condition that's atypical, and therefore an AVM wouldn't be an applicable valuation product. So always make sure that you check and make sure that an AVM is the suitable product for that loan type that you're originating for, and then it can be trusted throughout. What we see is that for efficiency purposes, it does make sense to stick with one vendor throughout the process. When you have a hit and it does meet the standards, you can utilize that valuation, and it's reliable for a set period of time. And also the dates in which, if it's taking an extremely long amount of time for the loan to get through the funnel, it might be that after a certain amount of time, the investors wouldn't trust an evaluation that's 60 days old. It would be appropriate to perhaps re-pull that valuation prior to closing.
So that's a really good segue into a question we often get with our customers and prospects. So you mentioned earlier that ClearAVM provides the value, obviously. It provides the comparables. both listed and sold properties in the neighborhood, and the key details of the property. Is that data, is it, are you able, or are our customers, mortgage lenders in the industry, are they able to use that data and present it to the consumer, or are there restrictions on data use?
The PDF that we provide should be a part of the document package that inevitably goes, to your customer. That's a policy that each of your groups will set on your own. However, there's no restriction from our side about providing that information to the end consumer.
Gotcha, because some of the ideas that come up with our mutual customers is they love to help, with transparency in mind. They love the consumer to understand, like, why did this value, why is it what it is, by showing comparable, by showing the market, and also to validate, details about the property. So what happens if, public record said this property is a 1,800 square foot home, 3 bedrooms, 2 bath, with a pool, but it's really 2,800 square feet, 5 bedrooms, 2.5 baths with no pool. Does that then escalate to a more traditional product? Does it go to a desktop review, or is there a way to modify the AVM with new assumptions?
Certainly, that's a great example of when it would be appropriate to escalate to a different valuation product. At Clear Capital, we're working on a variety of different analytics products that's able to, assist in solving that problem. However, at this time, they're not integrated through the BeSmartee platform. But that data discrepancy, that's one of the benefits of providing, the PDF to your customers in order for them to validate the value. Because we'd like to make sure that not only you're originating at the correct value for the home, but also that your customers are experiencing that same level of transparency. So having them, check out on the estimate and gain trust in that estimate will help them move through the funnel. In the event that that information is incorrect, of course, there are support channels to be able to pass through those types of discrepancies to, and we'll do our best to make sure that we get the correct information inside of there. However, in the event that that information is incorrect at the level of public records, etc., those are longer escalation paths that, in order to not impact the timeline for your specific origination purposes, it might be apt to opt for a different valuation product.
Wonderful. Thank you for answering those questions. Well, what if we get go ahead, Erica.
Oh, I think we can just get right into the demo to see exactly how we can order through the platform.
Certainly. Let me go ahead and take screen share. Okay. So what you're seeing right now is the BeSmartee MLO command center. This is where originators and sometimes even processors will live, out where they originate loans and answer questions and help the consumers go through the process of closing a loan. So I open up a random loan record. An address is required. And if you go down to the left here, you'll go down to services, where I've actually ordered a couple different AVMs down there below. So if there's already an existing AVM, you can see details of the AVM here. You can click on the documentation to see the PDF report that you're referring to earlier. And all this information is transparent. It's meant to be shared, like you said, with the consumer, with the originator, so they can collaborate and make sure data is the way it's supposed to be, so they can maximize their benefit. As we go back here, if you need to order a new AVM or AVM for the very first time, it's as simple as clicking order. You can order an appraisal, of course, but in this case, we're going to order an automated valuation, and you click order. And what will happen is this will just go ahead and ping the Clear Capital servers, and in about 15 to 20 seconds, the order will return, and that data will also be injected, if you choose to configure that way, injected into the loan record itself, thereby reducing data entry and input requirements, and of course, data entry errors as well. So we'll just give this about 10 more seconds. And once it's done, now you'll see 3 different AVMs down below. Obviously, in this case, we all ran on the same day. So it's gonna be identical value, identical data. But you can imagine you can run this through the life of the origination process. You can run it at the pre-qual process. You can run it during processing. You can run it in underwriting. You can do diligence on it as well. These are all possibilities. One thing I will mention, what you just saw is a manual trigger of the AVM. The AVM can also be triggered automatically through the consumer workflow. Whereas the consumer is going through, they provide their first name, last name, they provide their proper address, then we could trigger the AVM. They'll eventually land on a screen that says, hey, we think your home is worth, in this case, $863,000. We think you have a tappable home equity of X. How much of that would you like to draw initially? So those are ways that you can use this, use the ClearAVM in the workflow, in the hands of originators, provide clarity, transparency, and certainty to your borrowers and your originators at the very upfront process, rather than waiting downstream where communication could, go awry. Miscommunication could occur. So we want that certainty upfront, set those expectations, and really drive a positive consumer experience with your brand. Erica, is there anything else you'd like us to show here on the AVM? But it really is that simple. A lot of work to make it simple, but happy to answer any questions about that if you have.
Yeah, I think that looks great.
Okay, let me go and stop sharing so we can go back to the deck.
All right, at this time, we welcome any questions. We'll give everyone a second. I think we actually already had one come in. Someone would like to know, how does the partnership between BeSmartee and Clear Capital for AVM align with the broader trends in the mortgage industry? Specifically, what sets it apart from other solutions?
Yeah, great question. Eric, if you don't mind, I'll take it from my lens and I'll pass it over to you. So when we look at broader market trends, clearly, and I said this probably the 3rd time I said it, but it's tappable home equity, record highs. You have people with a lot of equity in a 2.5%, 3.5% mortgage, unless there's a major life event happening, divorce, death, etc. It's just not in their best interest to refinance to take their cash out. So that market trend leads to offering the home equity products to your consumers, to your borrowers, so they can tap this equity that they have in their homes. That's one of the major trends. The second major trend that we're starting to talk about, we talked about a little bit earlier, is assumable mortgages. There are millions of record or properties financed by FHA and VA. Those mortgages that they have at 2.5%, 3.5%, they might want to sell their home. And if they sell that home and the borrower qualifies for FHA, or they are a veteran, they can qualify for VA, that mortgage will just move right over and get assumed by the new buyer. In that particular case, we're facilitating, purchases and transactions, helping someone get into a home, right? Help someone get out of a home for whatever reason. But then that seller has equity. Call it $200,000 of equity. Well, this buyer doesn't have $200K in cash. So that's where home equity loan comes into play. That's where a HELOC could come into play to take the second lien position. They can issue that, say, at $170,000 because $30,000 is a down payment. That $170,000 sits in a second lien position, and that fund goes right over to the seller, making them whole, giving them the incentive, right, to sell the property and maximize their capital gains. So those are 2 market trends that are immediate, and 2 market trends, frankly, that we think will exist for the next 2 to 3 years. We're all looking forward to I'm hearing a lot about refinance boom next year. Rates are going to go down, but guess what? Rates aren't going down, right? The Feds are pretty steadfast. They've not given any indication that rates are going to go down. They're holding it steady. And, kind of putting out there that rates could go up again. That means rates are going to sit pretty high for the foreseeable future. Fannie and Freddie's guidelines are still showing rates go down. Goldman Sachs just released a report this week, last week, that they're reforecasted their mortgage rates. It's going to be a lot higher. It's going to go down very little. Point of the story is end of 2024, end of 2025, rates are expected to go down a little bit, but not enough to make it so that refinance transactions increase in mass. Home equity products are still very viable in this environment today. So those are the two major ones. Erica, I'll hand it over to you for anything you'd like to add there.
In this environment with, home equity being a really desirable product for customers, AVMs are really well suited to be able to be the valuation product selected for home equity products. And so just the speed and the efficiency that lenders are able to get utilizing an AVM is really the basis of the partnership that we have with BeSmartee, is just servicing this great need that's out in the environment and making sure that you guys are able to have a great customer experience and also a great experience for your internal users that are processing, underwriting, and closing all of these home equity loans.
Yeah, if I could just add to that question, something that just came up. Our initial integration with Clear Capital is about AVM supporting home equity products, and there's a data to support the growth and the size of that market. As the market shifts, don't know when it's going to be. We think it's going to be 2025, 2026, right? Where home equity products will decline potentially, but the market will shift in other ways, right? So this first step in the relationship is critical for us to establish the integration points, establish relationships, establish the data and the workflows that we can build upon in the future. There's new things that Erica, you can probably speak a little bit more of, like these hybrid appraisals we're hearing about. You don't have to charge borrowers $500 for an appraisal anymore. Under certain conditions, that fee can be dramatically less and dramatically faster, making it more advantageous and more streamlined for your consumers and borrowers. So I'm really excited for the partnership, and not just for this product, but what it paves the road to down the future.
Yeah, there's definitely opportunities for both AVMs and other valuation products to be useful as the market does change, and as those needs of lenders drive into other valuation products. We're committed to growing and expanding this partnership.
Good question. Thank you.
Another question that came up is they're wondering what confidence level suggests a need for further due diligence.
Sure, I can take this one. Clear Capital delivers AVMs only when the confidence score is above 70%. So in our eyes, anything below 70%, we're actually not delivering those, and therefore a customer wouldn't be charged for that AVM. You wouldn't receive anything within the BeSmartee platform. However, our coverage is high, so you can expect that we will be delivering mainly confident predictions. In the event that there are, from your investors or whoever will be purchasing the loans, there are requirements that are more strict, you can utilize that confidence score to create a threshold for yourself and pass off to a different valuation product. However, Clear Capital is committed to delivering only confidence scores above 70%.
I got a follow-up question to that, Erica. So I'm going to take us way back here a little bit. I remember, coming across AVMs in the early 2000s, and it really became popular with consumers with Zillow, the Zillow home value. And that really grew. People were flocking to see their home prices go up. And when the market tanked in 2007 or in 2008, more people flocked to Zillow to see their home values go down, right? To really just monitor the value of their asset there. Back then, I remember the feedback was, AVMs are unreliable. AVMs can't take into account nuances that only an inspector can't out in the field. How has that technology evolved since those days? Because you mentioned earlier, underwriters are underwriting to this, takeout partners are funding to this. So how has it evolved over the years?
Certainly. So the valuation product that's, selected and, approved for use is always dependent on, the risk in that valuation. And so at Clear Capital, the way that our AVM is produced is we take a lot of, pride in the way that we source and model the data that we have. So the breadth of information as well as the quality of that data is what makes a reliable estimate. The factors that can only be picked up by an in-person evaluation, those are properties and valuations where you'll likely see the confidence score impacted by that. So for example, if there's a property that, we aren't able to see many properties within that area that are of the same square footage or have the same bedroom count, let's call them atypical properties, our valuation method, our AVM, will be able to give you an indication of how reliable that estimate is. And so those two components together, we can, create a valuation for all properties, and AVMs can come up with a number. Like on Zillow, they'll have a number that's for every single property. But since our AVM is used for lending purposes, we want to make sure that we're providing information that can be relied upon, which is why each one of our valuations is accompanied by that confidence score that's impacted by a property's typicality and as well as data availability. So in the event that we wouldn't be able to, stand behind that valuation, we won't produce one for that home.
Awesome. Thank you. I was just curious how it evolved. Seems like it's gone far away, almost 20 years now.
Yes, the improvements in how we're able to capture information, as well as modeling improvements, technology improvements over time. We're always iterating to make sure that we can create reliable evaluations, and we're constantly testing and monitoring for the accuracy. I think there are two different paths that have been taken in the industry. One is the consumer grade AVM, which is just in all cases, we have 100% coverage and we'll create a number. We'll find a number for this property. It can be relied upon for purposes, such as showing on a website. But when it comes to underwriting to a value, we like to think that lending grade AVMs that have an associated confidence score and are providing a high reliability are the choice that should be trusted by lenders and investors.
Very good. Thank you.
The last question, as a follow-up question, they would like to know about the non-disclosure states. Is there coverage there as well?
Oh, yes. So in Clear Capital's data, is not only coming from public records, but also from multiple different sources, which is what enables us to have true national coverage that includes non-disclosure states. So we're happy to, support valuations across all 50 states.
Thank you. Thank you, Erica. Thank you, Tim. Thank you, everyone that joined today. If you do have any questions regarding the BeSmartee workflow, please reach out to Tim. We have his contact information on this slide, as well as Erica. If you have questions specifically about ClearAVM, feel free to reach out to Erica. And if you're joining MBA Annual next week, BeSmartee does have a room at the Exchange Room at Aloft, Philadelphia downtown. So if you'd like to meet with them there, feel free to reach out. Thank you all, and we'll follow up with the recording.
Thank you, everybody.
Thank you.